Here's my take on one of the most monumental moves in the gaming industry's recent history. Electronic Arts, widely recognized for legendary franchises like Madden NFL, Battlefield, and The Sims, is being acquired in a $55 billion leveraged buyout. If you've been following recent trends, you know that large-scale acquisitions in gaming are becoming more common, but this deal takes things to an entirely new level. Not only is this the largest LBO ever in history, but it also signals a potential shift in how major game publishers operate and how investors view gaming as a long-term asset. Let's break this down step by step. Understanding the deal. Let's dive into the details. EA shareholders will receive $210 per share in cash, which represents a 25% premium over its closing stock price on September 25, 2025. Looking at the numbers closely, we can see that this is a substantial increase in value for investors. The deal's structure combines $36 billion in equity from the acquiring consortium with $20 billion in debt financing, largely supplied by JP Morgan Chase. From my perspective, this combination of equity and debt shows that the consortium is confident in EA's long-term potential, even as it leverages financing to scale the acquisition. Now let's pause for a moment to consider who is behind this deal. The consortium includes Saudi Arabia's public investment fund, PIF private equity firm Silver Lake, and Affinity Partners, founded by Jared Kushner. PIF already held nearly 10% of EA's stock, making them a natural participant in the buyout. Silver Lake brings a wealth of experience in technology and entertainment investments, while Affinity Partners adds a strategic and geopolitical dimension to the deal. To put it another way, this is not just a financial transaction. It's a strategic play aimed at positioning EA for a new era of growth, innovation, and global influence. What this really means for investors. From my experience, large buyouts like this often send shockwaves through the market. For EA shareholders, the immediate effect is clear. A 25% premium over the recent stock price is an attractive return. But here's what this could mean beyond the short term. Once EA transitions to a private company, the pressures of quarterly earnings reports disappear. On the other hand, investors will no longer have the transparency of a publicly traded stock. This means the company can take bolder risks, invest in long-term projects, and innovate without worrying about how each quarter's revenue impacts the stock price. Here's a quick breakdown. Publicly traded companies are often constrained by the expectations of analysts and shareholders. EA, now privately held, can potentially experiment more freely with game development, explore emerging technologies like AI in gaming, and expand into new markets without immediate scrutiny. From my perspective, this is both an opportunity and a risk. Freedom can lead to creative breakthroughs, but it also requires disciplined management to ensure resources are allocated effectively. Breaking down the strategic players. Let's break this down step by step. Saudi Arabia's public investment fund has been an active investor in the gaming sector, with stakes in companies like Nintendo and Scopely. Their involvement is not just about financial return. It's about shaping a broader entertainment strategy and diversifying investment portfolios in high-growth industries. Silver Lake, a global private equity powerhouse, has a history of acquiring and scaling technology-driven businesses. Affinity Partners brings a political and strategic lens, potentially connecting AI's content and reach to markets in the Middle East, North America, and Asia. To put it another way, this consortium is uniquely positioned to leverage AO's existing assets while exploring new avenues of growth. From my perspective, their combined expertise signals that EA is not just being taken private to streamline operations, it's being positioned to compete aggressively in a global gaming ecosystem that is rapidly evolving. Potential implications for EA and the gaming industry. Here's how this could affect the market. EA going private could have far-reaching implications for both the company and the wider gaming sector. For EA itself, the move provides a chance to focus on long-term strategy without being constrained by the expectations of public shareholders. CEO Andrew Wilson, who has led the company since 2013, will remain at the helm. This continuity in leadership is crucial because it provides stability during a period of significant change. From my perspective, the implications for the gaming industry could be just as significant. With PIF's backing, EA may accelerate investment in esports, live service games, and AI-driven game development. If you've been following recent trends, you'll notice that major game publishers are increasingly seeking to expand their digital ecosystems, focusing on recurring revenue through subscriptions and microtransactions. This acquisition could provide EA with the capital and strategic freedom to enhance its portfolio, improve player experiences, and potentially set new standards for the industry. Now let's pause for a moment to consider the broader economic implications. Sovereign wealth funds like PIF entering the gaming space in a major way represents a shift in the perception of gaming as a serious investment class. Gaming is no longer just entertainment. It's a global industry with billion-dollar franchises, esports competitions, and a growing digital economy. Here's my take on this. We may see more large-scale investments from non-traditional players, including sovereign funds and strategic private equity groups, reshaping the competitive landscape of gaming for years to come. Challenges and considerations. On the other hand, there are challenges. Transitioning a public company to private ownership comes with risks, particularly around governance, transparency, and accountability. There's also the question of balancing creative freedom with the financial goals of investors. From my perspective, managing these dynamics will be critical. EA's ability to maintain its creative culture while scaling operations and meeting strategic objectives will determine whether this acquisition delivers long-term value. Here's what this could mean for gamers. While the move could result in more innovative titles and improved gaming experiences, it could also lead to a focus on maximizing profitability, such as emphasizing live service models, in-game purchases, and franchise expansion. Developers may gain access to more resources, but they could also face increased pressure to deliver results that align with investor expectations. To put it another way, the challenge will be maintaining a balance between commercial strategy and creative excellence. Looking ahead. Looking at the numbers closely, we can see that the $55 billion buyout is not just about the premium paid to shareholders. It's about the potential for future growth. EA has a rich portfolio of intellectual property, an established global audience, and a strong presence in multiple gaming segments, including sports, first-person shooters, and simulation games. With new ownership, the company has the potential to leverage these assets more aggressively, entering emerging markets, exploring next-generation gaming platforms, and integrating advanced AI into game design and user experience. From my perspective, this acquisition may serve as a blueprint for how major gaming publishers could operate in the future. Private ownership combined with strategic investment allows companies to focus on long-term innovation, something that is increasingly necessary in an industry defined by rapid technological evolution and shifting consumer preferences. Here's a quick breakdown. By removing the short-term pressures of public markets, EA can prioritize quality over quarterly earnings, experiment with new genres, and perhaps even pioneer technologies that redefine how people play games. Conclusion. In conclusion, the $55 billion acquisition of Electronic Arts is more than a financial transaction. It's a statement about the future of gaming. Here's my take on the deal. It reflects a growing recognition that gaming is a high-value, high-growth sector worthy of serious investment. From my perspective, the combination of PIF, Silver Lake, and Affinity Partners brings a mix of financial clout, strategic vision, and global insight that could propel EA into a new era of innovation and market leadership. Let's dive into the details. The deal provides immediate value to shareholders, operational flexibility for the company, and strategic opportunities for growth in emerging markets and new gaming technologies. Here's how this could affect the market. As sovereign wealth funds and private equity continue to target high-growth tech and entertainment sectors, we may see increased consolidation, more private acquisitions, and a broader global influence on how games are developed, marketed, and monetized. To put it another way, EA's buyout is not just a milestone for one company, it's a bellwether for the entire gaming industry. Investors, developers, and gamers alike will be watching closely to see how this historic acquisition shapes the future of entertainment and interactive media.